Hey everyone, welcome back to Advisorbit. Today, we're diving into the world of long-term investments. If you're looking to build wealth over time and navigate the complexities of the market, you're in the right place. Before we get started, don't forget to hit that subscribe button and ring the bell to stay updated on all our financial content. Now, let's jump into it. So, what exactly is a long-term investment strategy? It's all about holding onto your investments for more than a year. This includes assets like stocks, bonds, ETFs, and more. But here's the catch. It requires discipline and patience. Today, we'll explore the benefits of this strategy and why it might be the key to your financial success. The power of stocks. First up, let's talk about stocks. Investing in stocks for the long term is one of the most effective ways to grow your wealth. Just look at the S&P 500. It experienced annual losses in only 11 out of the 47 years from 1975 to 2022. That's a track record worth paying attention to. Asset classes and returns. Now, not all asset classes are created equal. We'll break down the best options for long-term investors. Spoiler alert, stocks tend to outperform the rest. The S&P 500's average annual return of 11.82% between 1928 and 2021 speaks for itself. We'll also touch on emerging markets, small and large caps. So, stick around for the insights, riding highs and lows. Stocks are known for their highs and lows, but that's okay for long-term investors. We'll discuss why enduring short-term drops can lead to better returns over the years. Even in the face of historical events like the Great Depression and financial crises, holding on to your stocks pays off in the long run. Investor behavior. Now, let's get real about investor behavior. We all claim to be long-term investors until the market takes a dip. Dalbar's study reveals some eye-opening stats. The S&P 500 had an average annual return of 6%, but the average investor? Just 2.5%. We'll explore the reasons behind this, from fear of regret to market timing mistakes. Tax benefits and cost efficiency. Long-term investments come with tax perks. We'll break down how profits from stocks held for over a year get taxed at a maximum rate of 20%, making it a smart financial move. Plus, we'll delve into the cost efficiency of a long-term approach, saving you money on tax. Compounding with dividends. Dividends are a game-changer for long-term investors. We'll discuss how reinvesting dividends can compound over time, boosting your portfolio's growth. Whether you're into index funds, dividend-paying stocks, or high-growth companies, we've got tips on building a winning portfolio. Consult a professional. As we wrap up, a quick reminder to consult with a financial professional, especially if you're new to investing. Everyone's financial journey is unique, and a professional can help tailor a strategy that aligns with your goals and risk tolerance. That's a wrap for today's deep dive into long-term investments. If you found this video helpful, give it a thumbs up and share it with anyone looking to secure their financial future. Don't forget to leave your thoughts in the comments below, and until next time, happy investing.